Hello and welcome to Smart Waves. Today and in this video, we're going to be talking about potential midterm trends on gold ounce. Do you think we're going to be seeing higher highs or a deep, big correction is about to happen? Let's find out from the perspective of Elliott Waves theory. Alright, so let's talk about the midterm potentials and scenarios on the weekly chart. Now, based on our previous counts and analysis, which were actually included in another video previously, this was our count, right? So we see this move from this bottom right here. Look at the prices, $1,614, right? So we counted this leg as a WXYXZ, and our previous analysis said that this leg Z was more likely to be finished here, and as of now we have two potential cases for the continuations, and we're going to talk about it here. So let me just clarify something before we talk about the price action of this zone. I want to be talking about this zone. So when I'm counting this leg as a WXY, it must actually satisfy the fib levels of a corrective move, which it actually does. So this is a WXY. These are the fib targets, and we could be talking about some time zones based on this extension. So as you guys can see, leg Y is well within the range of possible time zones in terms of the Elliott Waves theory. So as of now, that is why I'm counting it like this. And I want to talk about these correction waves too, this first and secondary waves of X. So the first thing I have to talk about is that all these moves are comprised of corrective structures, which is the main reason that I'm counting them as corrective complex waves and not as impulsive 1, 2, 3, 4, 5 legs. And that is the main reason, because the subwaves are all corrective structures, not impulse ones. So just like any other modern market, the price action actually forces us to count it like that. And let's talk about the corrections here. So in terms of the depth of correction for the first leg, we could be looking at let's see, okay, so 50%, a bit just more than 50% of correction here for the first leg, and the structure is obviously a WXY. As you can see, it's corrective as well, so I haven't labeled this here. And in terms of, let's say, the fib zones, right? Time fib zones. Let's see what happens here. So, again, it is still within the range, right? Then you look at this, and it took a bit more than 0.618 in terms of the relevance to this leg, first leg up W, right? So it is well within the range, it's acceptable, and we talked about this leg Y, and let's talk about this leg X because it's very important to our analysis today, right? I'm gonna go back, before I go back to the daily time frame, let's talk about the depth of correction here for this secondary leg. And as you can see, the three most, let's say, probable fib levels for wave X, none of them have been touched here, so I'm just going to add another one, which is actually included in the textbooks, but it's not quite probable. But when I search this on, we can see that it has been touched, so I can actually call this wave X. And in terms of the subwaves of this move, I'm gonna go to the daily chart. Before that, I'm gonna mark this price action here and then switch to the daily time frame so we can actually analyze what has happened right there. So yeah, this is our price action on the daily. I'm going to delete this because we found it on the chart, and let's talk about this one. Now, I called wave Y right here and wave X right here. It means the whole thing is considered a corrective structure called an expanded flat, as you guys can see. And this first leg is obviously a corrective structure. I can call this WXYXZ. The second leg, as you guys can see, because of these price action, is absolutely corrective. So this is my leg B. And when it comes to expanded flats or running flats for the matter, we could be looking at these fib levels for the target of leg B. So I have this right here, wave B flat, and as you can see, didn't go above this 1.236, right? So as long as it's not above this, it could still be acting as a wave B, making this structure labeled as an ABC. And the last one, guys, could be counted as an impulse. As you can see, I can be counting this as 1, 2, leg 3 maybe here, leg 4, and a leg 5, right? Or I can count leg 3 here, another expanded flat in the middle, and yeah, this is the leg 5, right? So both of these are possible. So this is an impulse move, which enables us to label this as an ABC. And this is what happened right there. And in terms of the fib levels, we talked about it. And I'm going to switch back to the weekly chart so we can talk about time fibs for this leg as well. So it's absolutely clear for you guys why I'm counting it like that. I'm going to delete this right here. And when it comes to fib levels, let's switch back to fib time zones right here. And yeah, as you can see, it's well within the range of a wave X, right? Very popular. These two fib zones are very popular for a wave X. So that is why we're counting it like this. I'm going to delete this right now, get back to the chart, and talk about the price action of recent history. So for the last leg, which is the bigger leg C, we expected, as I said, we expect the leg to finish here, but the price action here showed us otherwise. And as of now, we could be, for the bullish case that we are looking at right now, we could be looking at a WXYXZ leg, right? So the target levels for this one could be extracted from the move right here. These all could be the targets, and this, I mean, the last one, this leg Z right here, could be turning into, right now it's a WXY, right? But it could actually turn into a WXYXZ, so it could be going for higher targets. But as of now, we have touched a very interesting target level right here, right? So yeah, this is the bullish case. The invalidation is right here. Or for that matter, this leg Z could be finished anywhere within the channel, right? Could be looking at higher highs right here. But the most important point of this video is that we could be looking at a bearish case as well, which I'm going to explain right now. So let me go back to the tree, turn the bullish count off, and claim that leg Z was finished here. And for the bearish case, I have to change it a little bit. So, guys, we could be actually looking at another expanded flat. Let me just delete these ones because it is now invalidated. And let me turn this on right here, 1.2, yeah. So, invalidation. New invalidation for the bearish case, because it's a new one. Yeah, this was like Z. Let me change this. It has to actually go higher. Okay, I can't touch this right now. All right, so this is it, right? I can be claiming that this leg Z was finished right here, and right now we are doing another expanded flat, just like the secondary wave X we previously talked about. So this is absolutely corrective, right? A, B, C, W, X, Y. Let me just actually switch back to the daily chart so we can talk with more clarity over there. So, right, all we know that this structure is absolutely corrective, no matter you want to call this ABC or a WXY, doesn't matter. This whole thing right here is another corrective structure. You could be calling it a WXY, as I just indicated on the weekly chart. We have touched the first fib level right here. Okay, so for the bearish case, we could be claiming that we are in the middle of another expanded flat, and from this point on, we could be expecting a 5-leg down structure impulse, right, with these target levels. Let me just change the color right here, so it's, yeah, just change, yeah. So I'm going to be using the blue one, and I'm going to delete the black ones down there, right? So if I'm counting this whole thing as an A, this could be the wave B with the invalidation above the purple level right here, and we could be expecting 5 legs down from this top right here. And in terms of price action, we can claim that some liquidity above this previous all-time high has been grabbed, and the market would be ready for actually going down. So as long as we have not closed a daily candle above this invalidation level, this bearish case could be valid, right? So this is a very likely possibility from my perspective, at least. So yeah, so this is going to be my bearish case, and let me just okay, C should be here, somewhere here. Let me just switch back to the weekly chart so we can conclude our video analysis today. So we have actually two potential scenarios for the midterm on gold ounce, and this is it. This is the bearish one, which claims that the price could be heading for lower lows because the leg Z has been actually over here, and we are doing an ABC, let's say expanded flat, right, or a running flat, doesn't matter, could be finished on these levels, right here, or the bullish count actually, which, let me add these 3 elements to my weekly bearish, and yeah, so weekly or the bullish case, right, which claims that leg Z has not finished yet, and we could be looking at anywhere within this channel for the target zone. But as of now, we are very close to the invalidation level for the bearish case. So right now it becomes a bit more interesting to me because it offers a better chance of a trade, right? Because it's very close to the invalidation level. And that's my logic. Maybe yours is different when you want to make a trade. So that's how different people react to this situations. But overall, these two are cases for the midterm, and later we're going to be updating our counts. So that's a wrap on our midterm Elliott Waves analysis on gold on the weekly chart. What do you think about the potential tendencies of this chart? Do you see a big correction coming up? or are you expecting higher highs? Let me know what you think in the comment section. And thank you for watching. Take care until the next video.